Hello and welcome to Bloomberg Quint. This is the Market Wrap. I am Agam Vakil. Well, the way markets have turned up, once again, consolidation continues, range-bound trade, but the positive, of course, is that the markets have ended in the green for yet another day. So the Nifty now closing just short of the 10,500 mark, and as you can see, we've largely traded in the green, though, like I said, it's been within a tight range. And of course, ending the day with gains of as much as 0.3%. With respect to some stocks which are actually leading the gains in today's day of trade, it was the information technology space which figured in the top gainers, and that's for that. There you have it. This HCL Technologies, Tata Consultancy Services, Infosys and Tech Mahindra. And of course, Axis Bank also continues its advance, but as you can see, most of the gains, well over 3 to 4.5% gains coming in from IT companies. On the losing end, we have weakness in pharmaceuticals space as well as the metal sector. So Vedanta down 2.7%, followed by Dr. Reddy's and Lupin, and Tata Steel also showing some amount of weakness. In the broader markets, we're looking at more losers in comparison to gainers. That's explained in the Nifty 500 advanced decline ratio. But in the gainers, we have Religare Enterprises up 9%. Tata Sponge advanced also well over 7%, followed by strength coming in for Dish TV and ITI, all gaining over 5.5%. On the losing end, Alembic Pharma down 6.3%, followed by Balrampur Chini, and a host of other sugar companies also lost out to a certain extent. And of course, GMR Infra along with DCM Shriram also down around 4.2%. So on the whole, it's, well, we're looking at consolidations largely restricted to stocks. And to get a better perspective, get a better idea of what's really happening in the markets, well, we have Neeraj Shah joining us to give us a perspective. Neeraj, how are you reading the variables right now?
I don't know. So, we're just thinking about it, that today is what, the 6th or the 7th day when we have had a gain on the indices. Yeah. And the last 2 or 3 sessions, we've had a gain coming in the last, well, 1.5 hours of trade and not really throughout the trading day. And it's not that the mid caps and the small caps are reacting. So the broader end of the spectrum is not really participating. Today as well, you've seen led predominantly by certain private banks and large IT names. The index do well. The Nifty Bank has done well. Nifty IT has done really well. Look at the small cap end of the market, down about 0.5%. So there's a bit of a dichotomy out there. Flows have been inconsistent. Volumes have been tepid as well. Cash market volumes. In today's session, while the FNO volumes will look heightened because of the weekly expiry, you didn't see heavy volumes in the cash market. So participation is a bit soft as well. And it's not across the board. Having said that, we are on the cusp of earnings season. Tomorrow it's a busy day for Agam as well. 2 large names, one index, one non-index, come out with the numbers. And maybe, just maybe, Infosys has ceased to be, honestly, the company that sets the tone now, because it's so chalk and cheese, all the companies. Right. We have one large IT company, one premier liquor company. It's not an index presence, but it's got fair bit of activity, that whole liquor space as well. And it sets the tone, arguably sets the tone of what could happen in the earnings. Incidentally, a couple of earnings, small earnings that came out today did look reasonably okay, the likes of VST, etc. But one is hoping that earnings season starts off in good vigor, and that maybe, just maybe, spreads onto the broader end of the spectrum, because that's where we need participation.
Absolutely. And I do want to talk about IT stocks, but just in a bit, because let's get a technical check going and see what our technical experts have to say about how they are reading the variables in the markets. We have Randhira as well as Jay Bala joining us to tell us a little more. Listen in.
Until unless there is no weak pattern being developed on the daily chart, one should be long on Nifty. On the upside, as we said, that 10,478 would be the immediate target, and if it sustains about that, then that could be the next target would be around 10,560, which is the gap area, and it is an island reversal gap which was formed just a couple of months back. So definitely one should trail the stop loss to 10,300 and buy on dips around any dips, maybe 0.5% in correction in the Nifty.
The medium-term price objective is about 11,400 to 11,500. I think the markets are heading towards that. we've been bullish on Brent, and Brent has broken out beyond 71. So you'll see all these things playing out, and IT is doing pretty well. For every week between February and March, we had at least one bullish IT stock which we had picked up and identified and said IT index is going beyond the January highs. So the message from the CNX IT index is that tomorrow it's likely to start off with a very good result season for the IT stocks.
Well, we continue to see traction in one area of the markets which is extremely active, and that is the oil marketing companies and the way we've seen a fluctuation in its share prices. And we have Sumit Sarkar once again joining us to give us an idea about what's really going on. Sumit, we've spoken about this area a lot in the last few days. What more can you add?
So first I'll tell you what happened yesterday. So yesterday Bloomberg reported that the 3 state-owned oil marketing companies will have to absorb the ₹1 hike on fuel prices. Post that, you saw a decline of around 7 to 9% in all the 3 state-owned oil companies, that is HPCL, Bharat Petroleum and Indian Oil Corporation. Today also they started the day on a lower note. They are down around 2 to 3% odd. But later Oil Minister Dharmendra Pradhan came out and said that the government has not given any such directive to all the 3 oil marketing companies, and the free pricing mechanism will prevail, and there won't be any price hike absorption that the oil marketing companies will have to done. So post that, we saw a spike in all the 3 oil marketing companies, and they ended the day on a flatter note. So that's what has happened so far in the oil marketing companies, and for 2 days they are down in the range of around 7 to 6% odd.
Fair enough. Thanks for that, Sumit. Of course, they continue to be in focus considering we've seen so much, should I say, strength in crude oil prices, as some reports suggest that crude is likely to go to as much as $80 a barrel. But that's, wait and watch. Of course, the other sector which was extremely active in today's day of trade was the information technology sector. So as I was showing you here, we have HCL Technologies, TCS and Infosys along with Tech Mahindra all gaining in trade today, all advancing, and possibly one of the very big reasons why we've seen markets remain relatively buoyant. We have Infosys earnings tomorrow. We're expecting nearly 2% growth in dollar revenues as well as your rupee revenues. Margins expected to remain largely flattish, but it's not going to be so much about what's happened in the fourth quarter. Infosys is going to be all about the future. First is the FY19 guidance and what the company sets it out to be. And of course, expectations are well subdued, at least with respect to the revenue growth guidance. But when it comes to margins, well, we can expect around 23 to 25%. And the second most important thing is, well, we have a new person at the helm, so we will keep an eye on what Salil Parekh has to say with respect to strategy and all the areas that he intends to focus in order to take Infosys forward. That said, talk to you about the final sector that we're talking about, is where we've seen some fluctuations in prices for cement, and we have Nikki Mirchandani joining us to give us an update. Nikki, what do you have for us?
Hi, Agam. So we all know that the pricing trend has been pretty much subdued or remained depressed for the whole sector as a whole. But then in the month of April, we have seen some kind of respite coming in for cement companies, at least across the region. On all India basis, we've seen a good price hike of as much as ₹5 per bag, as compared to a cut that we've seen of as much as ₹9 in the previous month. The recovery is mainly on back of the price hike which have been taken in central, western and southern zone. However, the recovery has fallen short of expectation, given that we are in the middle of a busy construction season. In fact, Agam, in the morning we had a note for JP Morgan which said that although it's constructive on the center for the sector as a whole, but then it says that the lack of pricing discipline that these companies are following in light of the continued cost pressures are expected to weigh down on the profitability as well as the valuations of the company. Reacting to this, they also downgraded ACC, Ambuja and Ultratech. The target prices were slashed down by as much as 15% from the previous levels. In effect to which we also saw ACC, Ambuja, all the pan-India basis players ended down with a cut of more than 1%.
There you have it, guys. So 3 top sectors which have remain in focus in today's day of trade, and we will continue to track developments there. But that's a wrap on the markets. But don't go anywhere. There's lots more lined up. So stay tuned in the Bloomberg Print.